Hello and welcome to Stock Market Fever. Today is Saturday, May 14th, and in this video we will analyze and evaluate Cathie Wood's Ark Invest to see why Cathie Wood has such a hardcore cult-like following, where Ark Invest has been, and where it may be going. Warren Buffett may be one of the long-time most famous portfolio managers in the world of investing, but in recent years, nobody compares to Cathie Wood's meteoric rise to stardom. She has over 1 million Twitter and YouTube followers. She's appeared on the covers of magazines and has spoken at numerous conferences to her legion of followers. Cathie Wood is a visionary in the eyes of her millions of fans. She believes that massive technology advances will affect the globe in the near future. She also believes much of Wall Street is too afraid to bet on that future. Bloomberg News Editor-in-Chief Emeritus Matthew A. Winkler named Wood the top stock picker of 2020. Wood managed 2 funds that were among the top 10 largest female-run funds by total net assets as of March 2021. But Wood's flagship fund, Ark Innovation, is lagging the S&P 500 for the trailing 5 years as of May 2022. The fund's value has plunged by more than 70% since its peak last year. This year, it has dropped 60%, and Cathie Wood's critics have been loud and vocal.
It really is true that Cathie Wood is the kiss of death. And, you usually don't want to say that, but I think you have to throw out all the bromides and really speak truthfully here because the viewers deserve it.
Tim,
she's awful.
Her funds made huge gains in the early stages of the pandemic, but now they're performing much worse. Was she intelligent or simply extremely lucky? Is Cathie Wood's flagship fund, Ark Innovation, really the kiss of death? Is this really awful? Let's take a look and see. If you had purchased Ark 5 years ago in 2017, you would have paid about $26 per share and seen your investment go all the way up to $159 around January 2021. Quite an astonishing return. But since then, Ark has been on a long downtrend, closing on May 12th just under $40 per share, only to bounce back a tad on Friday, May 13th at $43.60. Ark's storyline sounds great. It would seem intuitive that investing in disruptive companies would provide a big reward, but it also entails big risks, particularly in the face of a market that has been brutal almost across the board and particularly savage to tech stocks. Ark's recent top 10 holdings by percent of net asset value are all sharply down this year, with some big-name losers leading the way. As of Friday's close, Tesla is down 27%, Zoom is down 48%, Roku down 57%, and Teladoc led the pack, down an astonishing 63%. Some of the criticism of Cathie Wood has been her seemingly excessive optimistic stock forecast, such as setting a target price for Tesla to come in at $4,600 in 2026, just 4 years from now. Tesla closed Friday at just $769, up $41, but down from trading at around $1,000 a share just a few weeks earlier. Critics have argued that she is excessively and publicly optimistic, overstating realistic growth opportunities and understating potential loss as a means of drawing in more investment money into her funds, for which she earns substantial management fees. And how are stock analysts rating Ark? Morningstar has given Ark its lowest possible rating of just 1 star. Morningstar strategist Robbie Greengold noted that since its meteoric rise in 2020, the strategy's exchange-traded fund has been one of the worst-performing U.S. sold funds, as the aggressive growth stocks it held fell back to earth. And as of May 2nd, Market Edge Second Opinion rates Ark avoid. Though they do not see ARK as a short sale candidate, they recommend closing out any long positions. But an article by JR Research, published in Seeking Alpha on March 30th, argued that bearish investors have gotten overly pessimistic over ARK and tech stocks, and that ARK investors should consider adding exposure as valuations remain depressed. And what is Stock Market Fever's forecast for ARK? While we do not offer investment advice, we are of the opinion that ARK is excessively risky given current market conditions, given the headwinds of galloping inflation, an aggressive Fed raising interest rates, oil prices surging, supply chain issues, and the uncertainties of the war in Ukraine. This is not to say that we believe that all tech stocks and industry-disruptive stocks are bad, but that ARK has not shown the ability to pick the few winners out of an overall market slam down, and that stocks or exchange-traded funds focusing on oil, gold, or more traditional hedges against inflation make for much better bets in the coming months. But what do you think? Where do you think ARK is heading? Do you think the holdings in ARK are oversold and will come back the fastest if and when there's a turnaround? Or do you agree with our analysis and opinion about oil stocks, gold stocks, and more traditional inflation hedges being a better bet? Please leave your thoughts and comments below, as we'd love to hear from you. And be sure to like and subscribe to Stock Market Fever for future actionable stock market news and alerts.